What is up, everybody? This is the Misfit Happy Hour. Today is October 19th, 2022. Today I have two guests with me, Greg from GVol, and then John is making his second appearance today, and I'll let you guys introduce yourself and a little bit of backstory on each one of you.
Yeah, sure.
Yeah, sure. Well, Greg, if you want to take the honors, actually, I've already been on this thing. Why don't you take the honors?
Totally. I'll kick it off. Happy to. So my name is Greg Magadini. My background is as a proprietary trader. I got started at S&P Capital in New York back in 2011, and then chopper trading in 2013 to 2015, and then DRW for about a year. And then I quit and started trading crypto full time for myself. And that was late 2015 through 2020. I've been trading options for about 13 years now. Me and my co-founder decided to launch GVol in January of 2020 because we saw like there's a real need for kind of data analytics. Skew was around at the time, and there was all these things that I wish they had that didn't exist. So I decided to build a company and add a lot of data analytics, and pretty much options are my number one passion, and then crypto would be my second passion.
Yeah, I'll definitely put my weight behind the product you guys have built at GVol, Greg. It's really outstanding, and certainly the team here at Blockfills loves what you guys have done. Background on me, before crypto anyway, I was a market maker at the Chicago Mercantile Exchange, really focused on precious metals, interest rate swaps, and energy crack spreads. From there, I did dabble in environmental products. I was a market maker for carbon offsets, renewable energy credits, et cetera. And then I transferred into the crypto world. I started trading as an execution specialist for a hedge fund, primarily focused on Ethereum and Bitcoin. And then from there, I am now with Blockfills, and we make markets for institutions, hedge funds, in particular hedge funds, family offices, but then also we serve most of the well-known exchanges in the space as well. That's spot, options, futures. We do lending and borrowing as well.
Interesting. I guess we all kind of have a similar background, and we're all finding ourselves in a similar place, right? So if we each kind of want to go through, I mean, Greg, what was your interest for kind of hopping over from traditional finance over into crypto? And then how has kind of the path been building in the space? And then we'll go to John after that.
Yeah, that's a great question. So I actually started doing work in the crypto space in late 2012. Me and a classmate, Linda Shea, who actually runs a hedge fund now, Scalar Capital, we decided to do like a research report on the gold standard. Got all these books. It's like, it was boring as shit. And so we're like, let's do something else. And so we came across Bitcoin, and she was really interested in that as well. So we decided to do a research report on Bitcoin, downloaded Tor on her computer, went to the black web on her computer, checked all that stuff out. My conclusion was like, this is pretty nefarious. I don't know if I want to mess with this stuff. And kind of left it alone. This was $7 Bitcoin, didn't buy any. It seemed like kind of sketchy. And then when I was trading a chopper, I saw like Bitcoin pretty much touch $200 was the high. It came back to that high and broke through it. And I was like, okay, from a purely technical analysis perspective, like new all-time highs, no sort of precedent to this asset class. That's just a buy. You got to buy like the 200. So anyways, I bought 200, bought a bunch more all the way up to 1,000, went to the bank, got a loan, borrowed money, bought 1,000, and hit a bear market for 2 years. And I was like, oh man, I believe this in this long term, but short term is a little bit of pain here. And then Ethereum actually did their ICO, and I missed the ICO. I invested in this coin called Mastercoin, which was like an Ethereum competitor that kind of flopped. But then Ethereum started trading, and DRW had a bunch of it on its books, and DRW was run by a Bitcoin maxi, sort of like, anyone want this shit? I was like, yeah, I'll take all of that. So then I basically sold all my Bitcoin for ETH, and pretty much been an ETH maxi ever since. And then did a lot of research in sort of the crypto space. One of the things that I like a lot about crypto versus TradFi, but I still really like TradFi, is that it's such a new space that you're not competing with anyone who has 80 years of experience. It's like a clean slate for all the traders. The vol surface, there's a lot of good traders who are participating in it, but it's by no means like a solved game. It's not like playing chess against a computer. It's like a brand new game who no one knows what this thing is worth, how the vol surface should be priced, what the tail risks truly are, so on and so forth. So I think it's just like a fair playing field, and you can really kind of cut your teeth and make a lifetime of wealth doing it.
Nice.
I love Greg. I mean, that's a heck of a way to come into this space. For me, it was a little bit different. You know, I certainly knew about Bitcoin and Ethereum. Let's call it 2014. You know, very skeptical though, and especially with you know, trading in the traditional markets in precious metals in particular. It was you know, something that I was scratching my head on a little bit, and you know, didn't take the time to really dig in as I properly should have. That was until the CME group decided to list a Bitcoin futures contract, and that was at the end of 2017. That was you know, really the high of that massive run that happened in 2017. So I said, wait a sec, you know, if this is getting cleared by the CME, I better dig in, and so I did. Fortunately enough, there was a bear market that followed that massive run, and I was able to do my studying, and that really is what led me to you know, to look for opportunities in the institutional space for crypto, and that led me to a hedge fund that was, you know, really in the weeds on Bitcoin and Ethereum, and I started trading the stuff pretty aggressively, and then we started trading the spread as well, the Bitcoin Ether spread. And eventually, you know, not too long after that, the options started to come into play, and that's where the story really matures in terms of crypto. You know, watching the evolution from a peer-to-peer network, then you have the advent of centralized exchanges, and then you have the advent of perpetual swaps. And then from there, you have decentralized exchanges, and then the evolution really was options, and then lending and borrowing, and now structured products. So to cap it off, it was that CME listing that really made me dig into this stuff.
I think something that's super interesting, especially when crypto is thinking about tail risk, right? Like how do we even price this, right? How do you even price something that market makers step out of the way and boom, market's down 30%? What kind of metrics are we seeing in terms of volatility, market makers kind of pricing in these risks to really take advantage from both buy side and sell side in the space?
Yeah, Greg, if you don't, I'll chime in on top of it. I mean, you know, the derivative market is so important for the maturation process of crypto in general. And what I mean by that is, if we are going to have institutional capital come into this market, which we've now seen, you know, I'd say over the past 2 years really has been a massive driver of institutional capital into the space. But what they demand is the ability to manage risk. And, you know, they're really not, and when I say they, I mean, you know, professional capital. They're not just going to buy Bitcoin and kind of, you know, pray that it goes up. They're going to want to manage risk. Let that be by selling forward contracts and looking for some type of basis trade, or if that's selling a call option and buying a put option at zero cost, like a collar structure around their spot long Bitcoin position. That's what was needed to develop for this next wave of real money, I would say, and we've seen that, and so, you know, to your question now, Spencer, I think the derivatives markets, they were really driven by speculators when they first launched into the marketplace, and, you know, putting a fair value on something was quite difficult. But as let's use, for example, Bitcoin miners, which they're a natural hedger in this marketplace. As a Bitcoin mining firm began to realize the opportunities to hedge, I think that brought a real hedger into the marketplace, for lack of a better word. And now fair value was a really critical component to pricing the forward curve. So what we saw, let's say a year and a half ago in our massive run up, we saw futures markets trading way over spot, 25 to 35% annualized over spot markets. That was really speculatively driven, right? And you see natural hedgers coming into the marketplace, and now they're saying, you know, sold. So now we've seen that forward curve go from plus 25, plus 35% annualized over spot to a much more what I would say fair value assessment of how a forward curve should be priced. And really what that is that true hedger coming into the marketplace and realigning fair value over the speculative valuations that we were seeing.
Interesting. What about the vol space, Greg? What kind of insights are you seeing in terms of some of the 7-day at the monies all the way out? I saw in some of the 90 days are starting to get a little bid today, it seems.
Yeah, real quick, just to echo a point that John made, like having a derivatives market really helps mature the space. And I like to think about it, like if you think about house insurance and fire insurance, derivatives are essentially just insurance policies. And so, people buy their own homes and it's one of the safest and kind of classic investments and typically the largest asset that people own. Well, imagine you couldn't buy fire insurance on your house. All of a sudden, you're kind of playing Russian roulette with all your wealth and your house and roof over your head and all that stuff. So that's just a little example of like how important derivatives are. As far as the vol space here, I'm probably going to be echoing John here, but what we've seen in the past 2 years is like a huge shift in how people are participating in the options market. So a couple of years ago, or even as early as 2021, we saw a lot of upside calls being bought to the point where the forwards are pricing in 40% carry, but also the calls are trading at this huge, massive skew compared to the puts. And so you're having like this FOMO in the market that people just want to get long and they just want to get leverage long. And any way possible that they can do that, they're going to do that. So they're willing to pay up on vol, pay crazy amounts for like 5 delta calls, like 180 vol, 200 vol, something like that. And so now that the market's getting more sophisticated and more institutional, people are taking the other side of that. I do think there's still a potential tail risk, coming back to your question, Spencer, to both the upside and the downside. So a couple scenarios that I like to think about, on a downside risk, like what happens if someone figures out like quantum computing to mass scale, and then all of a sudden encryption like is no longer safe and SHA-256 or whatever we're using breaks. I'm not an expert at that, but I just imagine that has some sort of impact. Like, yes, we can fork code. Yes, we can upgrade code. And like in the long run, it survives, but in the short run, what happens? And then on the flip side, like, right now we're having like a very interesting world shift, like a power shift worldwide, it feels like. So like, who's to say that, I don't know, some central bank just doesn't want to buy $500 billion of crypto at one clip, doesn't care what price they're paying, and all of a sudden prices quintuple in like 2 seconds. And so I think both sides have some tail to them. I don't know how what's the probability of those hitting? They're both black swans, so I don't know exactly, but there's something there to think about.
So we've worked out the Elon Musk tweet tail risk. Is that fair to say? I think, what was that? That was like a 20% day, something insane in Bitcoin. I remember not sleeping for a decent amount of time during that period of time. Okay, so how is building in the space, right? You're both building on different sides of it, right? Product based and really diving into data. And I'm sure, John, you guys are doing multiple different things. I guess my question to both of you would be like, what's the biggest hurdle? And where do you see the space in 2 years, knowing all of this talent is basically flocking here, regardless of price?
Yeah, I'm happy to sort of kick that off. So we've started building in essentially a bull market the whole time. So like, I guess 2019 was the end of the bear market, and it's been a bull market since then. And so it's one of those environments where everything moves so fast that if you're not moving forward, you're moving backwards. And so in trading, it's a little bit of a different mindset. Like you're rewarded for being patient and not like impulsively trading or like taking trades out of boredom. In building in crypto, it's really different. It's like you better be doing something. Otherwise, a lot of other people are going to be doing it before you get to the punchline. And so I think one of the biggest challenges in building in the space is finding talent to like fit the needs that you have. Crypto is like a pretty lucrative space. So like people get super high salaries and really good comp. So not only does your project have to be cool and you got to be a pretty good boss and have a good vision, like you better be able to pay for that talent that you're acquiring if you're even able to find it in the first place. And so all that has a lot of pressure because you better do that fast. Otherwise, someone else is going to do it before you do it. And so that's a little bit of the mindset shift that I would compare from trading versus building in this space.
Yeah, that, you know, I'm going to echo you on you know, a key point there, and it's attracting the right talent. And that's been a bit of a challenge, especially on the development side. I think this industry moves so fast. You know, just for relative sake, there wasn't even a liquid options market 5 years ago, right? So when you think about Blockfills started in 2017. It really was answering the demand for those very early proprietary trading or institutional capital movers into the space. You know, the guys who were leaving trading desks at you know, traditional banks to go set up their own crypto trading shop because they saw the light and they wanted to get involved. There really wasn't a good institutional solution at the time. It was going to the most common public exchanges, and typically an institutional trader will have more demand than a more publicly facing exchange can serve, you know, especially at that time. So Blockfills, it's about pace, and you know, how do you build a dark pool aggregated spot market where institutional participants can get size done without lighting up public markets and, you know, kind of showing their hand a little bit. So we solved that part of the equation very early on, and then you're looking at the maturation of the market. Now you got to add options markets. You got to add lending and borrowing markets, futures markets. How do you build out the risk management systems and the back office support to allow professional traders to execute in a seamless fashion? That's a challenge, and I think Blockfills certainly risen to that challenge. But the pace at which this market moves, it's so fast. So for us to keep up with that, it's a constant challenge on the hiring side, and then just, you know, making sure these systems are operating as closely as possible to what traders are used to in traditional markets, which is no small feat, as these traditional market execution venues and tools, they've had decades to develop, and crypto is being tasked to build this stuff pretty quick.
Great. I think one of the key factors of blockchains that the common narrative is they're always running, right? And we've seen kind of in the past historically that they're not. They run into validator issues, they run into node issues, and there are some downtimes from time to time. John, from the market making side, how does that impact flows? How do you throw out bids and offers and provide liquidity when BNB says, "Hey, we're shutting down, we're freezing the chain for a bit"?
You know what? That's a great point. And you know, I think from a market maker's perspective, the 24/7 action, there's a bunch of challenges there that are not obvious at the surface level, and it's even just from a support side. You know, in traditional finance, we're used to being able to catch our breath on the weekends, right? Well, in crypto, there's no time to catch your breath, and this stuff trades right through the weekend. You know, in traditional finance, you're used to having a cutoff for settlement, where, you know, markets are, you know, let's talk about the gold futures market that's live for 23 hours a day, not 24, right? So you have a settlement window to, you know, make sure everything's lined up on the tech side and the market access side, and there's a whole reset for the exchange. In crypto, you don't get that breadth. So being able to provide 24/7 liquidity, no holidays, no breaks, no time to reconcile, that has been challenging, and Blockfills is fortunate to have gotten involved. You know, now it's been since 2017, so we've been able to hammer some of this stuff out. And I think to your point, from a market making perspective, it's super important to be diversified across your venues, and then across any hedge legs you have, any liquidity you're leaning against. You have to be very diversified, because next thing you know, one of these major exchanges, they have a withdraw limitation where now you can't withdraw assets for, there's been a couple recently, where there's a couple hours that you can't withdraw assets. And that's a problem when you're moving money around and making markets at different venues, or, if you have a blockchain go down, I'm not going to, single out any projects, but we've seen some notable projects have blockchain problems, right? And they've had to have, quick fixes on the tech to get those systems back up and running. What do you do as a market maker if you're dependent on that chain to move assets, especially now getting into DeFi, right? And moving assets in that regard. So I think there are known unknowns when you are making markets in crypto, and the known unknowns are, we know that we don't know what's going to happen. We know there's something is going to break, and how do we set up a protocol to react when something in the ecosystem does have a break? And then of course there are always unknown unknowns, things that we don't know. How do you plan for that kind of stuff? I think those are philosophical questions at that point, but certainly as a market maker, you need to expect that this ecosystem is new, it's fragile, things are going to break, and how do you prepare for that stuff?
I think the correct answer to this is the unknowns are a good trade. Because if you're the first one to figure it out, that means you're there. Greg, from the product side, the analytics, if you're pulling, and I know you guys have integrated DeFi and you have, you're pulling from, my assumption is blockchains, right? Or pinging oracles, calling oracles. How is that impacting kind of product development and thinking about building a product? What kind of hurdles that most people might not think about?
Yeah, as far as kind of the data side, as far as like a blockchain downtime or anything like that, that's kind of a typical problem we'll see in the CeFi side as well. So to me, that's not like too different. It's almost like the same problem. I would say the blockchain side is actually more reliable than the CeFi side. We even have like issues sometimes with AWS going down, which is sort of where we built most of our infrastructure, things like that. So that's just kind of a reality of life we try to navigate as best as possible. What I like about having blockchain assets, data assets, such as DeFi and CeFi and TradFi, is it kind of diversifies your market database. So it's fun to have some stuff in the on-chain world that's just kind of always going on, and then TradFi's closed. You can think of it as like indexes. You see in the CME futures, like you see all these gaps, which that's because the market's closed, and like there's just that's just normal. And then people trade against those gaps and things like that and use that as markers. But in the blockchain side, there's no gaps. And it's all like constant data stream. And so it's interesting to have a little bit of a diversification or a different point of view into that. Same thing with the CeFi side, 24/7. This is what makes me think that, so Deribit's kind of number one in the crypto option space. And even if TradFi does have a good solution at some point, they're not going to have that 24/7 market. So when I think about an index like Deribit's D-Vol, to me, that has to be the winning index, because it's the index that's just going to be always on point. Like it's always going on. VIX closes on Friday, it opens on Monday. We don't have that in D-Vol or any other blockchain-based indexes. So I think it's going to be interesting to sort of see the world going to that direction. I agree with John that it's like super tiring. I used to hate weekends when I was a younger trader. I love weekends as an older trader. It's just one of those things.
How is kind of the transition been? I mean, a lot of the stuff I do is very similar to traditional strategies, right? They're of course modified due to time requirements, due to just different inefficiencies, different alpha that exists, different market players, to be quite honest. How has that transition been from both of your guys' perspective? Do you think this space is going to decouple from traditional finance at a particular point in time? Are we stuck to this narrative where it's just a hyper speculative risk on asset?
I actually think that does decouple. I think right now, the NASDAQ correlation with Bitcoin, I think that's a truism for the time being. I don't think that's a forever thing. Even in like the short term right now, we're seeing a little bit of that change, but I wouldn't read into that. I think right now it's risk on, risk off. I think literally everything is up for grabs in the world right now. I think sort of the Western world order is up for grabs, which sucks. So it's not something I want, but I think everything's being challenged. And so the monetary system is no exception to that. I do think we're going to come to this point where it's like, at the end of the day, like fiat is just like whatever government you like the best. And so I think there's going to be a point where people might decide to like move away from fiat for real. And then it's not a risk asset. Then it's a whole different thing. And I do think we're going that in the medium to long term. And I sort of wonder like what happens when, or if I should say, there's like some sort of like geopolitical conflict and, you know, governments start seizing shit. Then crypto is like a safe haven. Like in 1930s, the US government like seized all your gold. It's like, why would that not happen now? So it's one of those things right now, it's trading like a risk asset. I would not read into that. I don't think crypto's been figured out yet. I don't think correlations have been figured out. I don't think vol has been figured out. So it's an open question in my book.
You know, that I like the point you made there on crypto potentially being a safe haven in the face of geopolitical turmoil. You know, with all the craziness going on in the world today, we haven't seen crypto be a safe haven, but we're in such early days that it's arguable that the real money, which you know makes this world go round, they're still not over the hump yet on crypto, and that's kind of, you know, you talk about like the Black Rocks of the world. You know, they're obviously coming fast. You've seen the headlines, but they're still not quite there. And once that real money sees what Bitcoin, Ethereum, et cetera, provides to the world, the free flow of value without being dependent on a government entity or, you know, any type of geopolitical risks in the transfer of value, I think that's where Bitcoin's narrative really shines, and a couple of these other crypto assets, they will really shine. And that's just a matter of time in my perspective. You also think about the trajectory we're going on. I don't like to say the word versus, but, you know, East versus West, international trade. Will the dollar always be the world, or will the dollar remain the world reserve currency for the flow of commodities? You know, crude oil, natural gas, will those be priced in dollars in the coming, you know, in the next decade, in the next 20 years? That's a big question mark. It's a bigger question mark than it's ever been, certainly in my life, going back 30 plus years. When we start talking about those types of questions, I think Bitcoin as a safe haven asset becomes even more obvious in terms of that geopolitical spectrum of the world, and what is, you know, what is the asset people are going to transfer value in? Is it always going to be dollars? Is it even going to be a fiat currency? You know, now you want to talk about the crypto rabbit hole. You know, you can start talking about, will international finance be driven by a government-backed currency like the dollar or the yuan? That's a massive question mark, and it wouldn't surprise me, just the way this technological evolution happens and the rate of adoption for technology. It wouldn't surprise me one bit if international economics starts to go towards a protocol-based currency rather than a government-backed currency.
Interesting. I feel like there's a lot of benefits for having blockchains and that kind of technology. And you see all the narratives, and especially the macro kind of spilling into it. Something that's super interesting to look at is when there's geopolitical issues that are happening, right? You have the invasion of Ukraine. If you look at the volume in ruble to Bitcoin, it just exploded over the next couple of days. Similarly with the pound to Bitcoin, in the last couple of weeks, there's interesting under the hood narratives that are getting spun up, and it's hard to say what way that flow is going, but we can speculate. And so I think that's very interesting to think about, as well as at some point in time, I do believe that the decoupling is going to happen. When does it happen? I don't know, but I guess we got to trade today as it is. And And Greg, are you actively trading, or are you more product based right now?
So as a company, we're pure product. As an individual, I'm always trading.
All right. Are you involved in crypto derivatives, or more TradFi, or what kind of space are you in?
Yeah, right now I'm in TradFi. Crypto derivatives got a little bit tough. I mean, I trade some Beto options.
Okay.
If I have like a interesting view, but it used to be a little bit easier to get on CFI exchanges as a U.S. resident than it is now. So ever since then, I've been a lot less, unfortunately, personal account crypto derivatives.
What's the play with Beto? I mean, if you don't want to spill the alpha, you don't have to. But what's the thought process in trading that versus some of the other options?
Yeah, so Beto actually has a pretty decent options market. It's about 20% open interest compared to Deribit. So that would be basically the second biggest exchange if we were going to compare it to CFI exchanges. So I do appreciate that. It's not like a super tight market, but it's tight enough to put on the trades that you want to put on. I'm a discretionary trader, so it's not like it's usually an opinion I want to express, and so it's not necessary that I go to Beto or the vol market. But when there's a certain view I want to express, if the vol space is the right way to do it, then I'm going to do it. If the spot space is the right way to do it, then I'll do it there. So that's where I'm trading some stuff. Otherwise, in TradFi, for the longest time, I followed the yen. I think this is finally coming to fruition. So I've been trading the yen since about 2013. I've had sort of a macro bias on that. And so that's playing out today. And that's been a really interesting space as well.
Interesting. I saw that I watched your interview with Deribit, and I saw that they're going to potentially be rolling out devol futures. How is that correct? Did I hear that correctly?
Yeah, so it's on our roadmap. So I'm really looking forward to that. That's another product that I'll trade sometimes is fixed future options. So I'm pretty excited to see devol futures. That's a really nice way to express vol positions directly with an index as opposed to like underlying options and having sort of different effects than pure vol. You'll have like path dependency and stuff like that when you're dealing with individual options as opposed to an index itself. And in TradFi, those products are really popular. VIX futures and sort of all the exchange traded products built on top of VIX futures are one of like the most popular trading products. So to see something like that built in crypto, I think it would be really cool, especially with that 24/7 market. So curious to see what that looks like when they roll it out.
What is John, what are you seeing in terms of like the flow? The last few days, I've just stared at Bitcoin going from 19,000 to 19,500 back to 19,000, and vol has just fallen off a cliff over the last couple of weeks.
Yeah, I think that's the story. It's these markets are quiet, which is I really did not expect to say that about crypto markets seemingly ever, but especially not this quick into it. The markets are slow. It makes me think, are we kind of peering into the future a little bit here, into where as these assets really mature, this is where Bitcoin needs to go anyway, to a lower volatility environment. Have we found that supply demand equilibrium for Bitcoin price to find that low vol? I don't believe we're even close. I think we have a rocky road ahead of us, full of volatility before the market does find some type of consensus as to where Bitcoin should be trading relative to other currencies and commodities around the world. But this almost is giving us a view of what Bitcoin price action could be once it's priced properly. Is that and that's going to be in the trillions of dollars of market cap by the time we get there. But this is really a little bit of a looking glass into the future, in my opinion, as to what crypto markets will eventually be like, but certainly not in today's world. So I expect that we're coiling here. As I mentioned in my prior comment, Bitcoin derivatives were leveraged by speculators really when they came into inception, going back just a couple of years, and that added to vol. I think people were bidding up vol and just speculating, and they wanted to be leveraged long, et cetera, and that brought a lot of volatility into the marketplace in turn. But now what we're seeing is there's vol sellers here. There's natural hedgers of these assets. Bitcoin miners have really stepped up their game. I think, prior to this year, there really wasn't a lot of conversation for that natural hedger to be involved in derivative markets for Bitcoin. That script has completely flipped. Now you see with Ether proof of stake, you have people who own Ether and they're staking this asset. Now they're saying, well, how do I manage the risk around that staked asset? Because if I'm gonna annualize a rate of return against my core position based on that staking reward, well, then what can I do? And I think the answer there has been you can sell forward, and we've of course seen that Ether futures market go into backwardation. And then it's the calls, and so you can sell covered calls against that forward stake, and in turn you can also buy puts and collar up that staking reward. So that's really where that's my opinion as to why vol has really come in and this market's flattened out, is that you have a lot of vol sellers now, relatively speaking. That's why I will also in turn say I think we're coiling up here, because now the market's getting comfortable selling forward and selling covered calls. I think that there's going to be an unwind there, where eventually this market's going to get bid again because there's too many people that are short this vol. So it's kind of I believe we're in a coiling event here with this market. I post on this stuff daily on my Twitter. If you want to follow me, it's at I am John Devine. I post analytics every day on the markets, and that's what we've seen on the analytics. This thing just won't move, it won't budge, but that just means the coiling is going to springboard up or down to an even higher velocity the longer we coil. So that's my perspective.
Interesting. Greg, on the vol side, in terms of what's the trade? I mean, D-vol's price in Bitcoin I saw in the 50s this week, and we haven't seen these levels in months, right? It would make common sense to try to get long vol, but every time you try, you lose recently. So what are you seeing in terms of some of the analytics and potentially things that you guys are following over at G-vol?
Yeah, totally. So one of the things I think is pretty counterintuitive from the vol trading perspective is that the obvious trade is expensive to hold. And so what I mean by that is, like, 2017 was one of the best years to be short VIX ETPs. But 2017, the VIX was also super low. I mean, it touched, I think, the 10 handle. And so I think vol is the same thing in the crypto space. When vol is low, what happens is the variance premium gets really expensive, because a lot of people will buy vol betting that it's going to come back, because it will eventually come back 100%. Just, when is that time? That's the hard part to decide. So if things remain constant, what we're seeing here is that we have pretty big variance premium. Realized vol is even lower than implied. Implied's at 50, realized depends on what you're looking at, but it's in the 30s. And so the term structure, what you'll see is that the term structure is pretty steep as well. So the at the money implied vol term structure becomes really low near expiration and higher the farther you go out. So not only do you just collect theta, but you also roll down the term structure. And so that creates sort of like a double effect. So realized would be sort of like the most true, this is where vol is right now. And so implied will drop to realize. And so being a vol seller in this environment is actually super interesting. Now, I totally think there's more downside to crypto. I think I don't see how we could be in a world where, like, the VIX is at 30. I don't see how we could be in a world where VIX tops out at 30. I think we gotta get past 40 to see bottom in equities. I don't see how we could see VIX top out above 40 and crypto vol basically do nothing. I think we got to test $10,000 on Bitcoin again. I still think we got 50% to drop. Now, what does that mean right now? Like, how do you balance maybe a short vol position with maybe a bearish bias? So there's a couple ways to do this. So one of the things to me that I like to do a lot is like broken butterflies, where basically I'll buy an at the money put, sell 2 out of the money puts, and then buy like a close the wing off way out. So let's say I like buy an $18,000 put, sell 2 16s against it to finance it, and then buy a 10 just to close off that risk. That's like a little bit asymmetric loss if I'm totally wrong and we blow through. But my thinking is that at some point this consolidation is sort of going to start to leak below the lows. And then if we fall down in a controlled manner, that vol is going to collapse. The 2 that you're short, it's going to collapse. The 1 that you're long is going to gain intrinsic value. And that's a way to sort of play a bearish bias / short vol bias. So that's one way to do it. One of the other things that I think is really interesting is the divergence that we're seeing in the vol surface. So like Bitcoin vol surface, like the skew or the risk reversal skew is actually it's climbing higher. So we saw a big trade go right before CPI in September. So there's a few traders out there on crypto Twitter who are saying, getting along a ton of Bitcoin calls. I think the CPI print's going to be weak. I think everything's going to rally. Everyone's like overestimating inflation. And so that didn't happen. And then the skew got instantly slammed back down. And now last week we had an interesting CPI print that was anything but good. And the skew is climbing back up to sort of those recent highs. Not quite there, but it's going there. And so I think that's an interesting divergence. And so there is a little bit of, let's say, optimism going out in the crypto vol space, at least in Bitcoin options, that could be hopeful for some. My long-term bias is still we got lower prices to go, but hey, who knows, man? We might get like a short-term rally to 23,000, something like that. And so, maybe that's maybe the options traders trading the skew right now are right about that. So those are kind of the 2 perspectives I have, short-term and medium-term.
So you're not in the bias that we're going to have a soft landing, is what I'm hearing. That is
no, I think things go crazy. I think my feelings are like things are very unstable right now.
Yep, definitely. I mean, it gives you very like quiet pre-2020 50% crash in one night vibes right now, doesn't it? It's almost like you're staring into a storm and you don't know what storm is about to hit, whether it be good or it's going to be really bad, but one of them is going to hit. So, well, I guess we started a little bit late. Is there anything else that you guys want to kind of touch on before we kind of hop off and wrap things up?
Greg, I'd love to go back and forth with you a little bit on this one. I think we just had the merge, right? Ethereum went from proof of work to proof of stake, and we've seen some repricing of the forward curve of the futures markets for Ethereum. Now Ethereum is a yield-bearing asset. Do you have any thoughts on that, Greg? Relative to Bitcoin futures markets, proof of work, Ethereum markets going to proof of stake? What are you guys seeing at GVol, and what's interesting there?
Yeah, sure. So, I mean, to me, what you're saying makes a lot of sense. It makes a lot of sense that the Ethereum futures prices should be trading below spot, because if I buy Ethereum, I can go ahead and stake it, and then I can go ahead on Deribit and hedge my risk, basically be delta neutral and earn free yield. So theoretically, in a arbitrage-free world that people talk about so much, it should be arbitrage-free, and the yield should be given up on your hedge. So to me, that does make sense. As far as Bitcoin versus ETH, I think this is really interesting. The open interest in ETH options is now bigger than the open interest in Bitcoin options. To me, that's huge. To me, it's foreshadowing of a flippening. I'm a guy who sold all my Bitcoin for ETH, and I think that's where the market's going in the long term. I definitely think ETH overtakes the market cap of Bitcoin as well.
Yes, it's really cool to watch the forward markets reprice in real time. I mean, and not often in traditional finance do you have events that are staring you in the face so obviously, and you can observe in real time like this. So to see the Ethereum market participants really absorb this shift in the protocol, and then how to price the derivatives against the base asset, it's been fascinating. And you know, when we talk about backwardation here, we're talking about the futures markets, the forward price of Ether trading below spot. And then that's really to make up for that gap of the yield that you earn by holding spot with that staking reward, you know, as opposed to Bitcoin, where you are not earning a yield just by holding your Bitcoin. That futures market should trade in contango, where futures prices are higher than spot, and there's a cost of carry there. So that's been one of the very, you know, from a market microstructure perspective, I think that's been a highlight of the past, let's call it, month since the merge, and to watch that play out in real time it's really fascinating. And to your point on Ether option volumes and open interest now exceeding Bitcoin, that's another fascinating thing to keep an eye on in real time, which is, you know, the best part about being early, is which we all are, even in this conversation here, early on crypto, is we get to watch this stuff play out. We get to really be a part of history.
Those short dated options pre ETH 2.0 merge, the pricing on the vol was insane. I remember watching it every single day in disbelief. And then what was it? The 7-day at the money was like 160 before the event. And then everything just kind of went haywire and then just collapsed. That was fascinating to watch. That was fascinating.
Agreed. I mean, what a technological achievement that they made that thing happen. No one even knew. You know, there was no glitch, no hiccups. Once, by the time they got there and got it done, it was just really impressive that there was no vol event following that merge. And then the right play was to fade vol. That to me is just an incredible accomplishment from that whole team running the Ethereum upgrade.
Definitely.
All right. Well, we open up the show the last 5 minutes. If you guys want to give a little plug to what you guys are working on. And yeah, we'll open the floor.
Cool. So our website is gball.io. We also have a Twitter at Genesis Vol. We also have a weekly newsletter and some content throughout the week. genesisvolatility.substack.com. And then lastly, we have a YouTube channel. If you just look up GVOL in your search bar, you'll see some YouTube videos, podcasts, and instructional videos as well.
Yeah, on my side, you know, Blockfills, that's the institutional market maker and liquidity provider I'm with. That's at blockfills.com. You can also find Blockfills on Twitter. And then myself personally, as an educator in this industry, written a couple books and built a couple of courses on trading futures markets and also building algorithmic trading strategies. You can find that stuff at johndevine.io. And then follow me on Twitter at @IamJohnDevine. I post daily analytics for Bitcoin and Ethereum. I think they're super helpful and should provide some interesting insights into how to look at this stuff from a market structure perspective.
Cool. Yeah, I can speak on both behalves. Huge fan of both of or what you both are building. And we'll wrap it up there. So thanks for hopping on, and maybe in the future we can hop back on. We'll see. So, all right. Bye.
Yeah, thanks, Greg.